Hi, this is Randy Finney with the Right Side of the Chart, and this is an early session update for Thursday, April 25th, 2024. It is 10:06 a.m. Eastern Time as I'm starting the video. Figured I'd get one out. Just wanted to kind of do keep pretty frequent updates on the markets now that we're, again, things are moving, volatility spiking up, the charts, at least my style, is clicking, in full gear. Sometimes, especially when volatility picks up and you've been waiting for a big move, that's when, from my experience, technicals work really well because that's what traders flock to, because fundamentals are kind of now getting thrown out the door. So let me just reiterate, we have Microsoft, Amazon, and Intel on deck tonight. So expect additional volatility going forward. Volatility can cut both ways. I'm going to talk about those earnings in just a second here. I just wanted to update this chart. So this is that 15-minute chart I've been posting lately, and I had colored the lines after the fact on those charts I got out. That's the yellow level right there, which way back here, after reversing, that was kind of where I had drawn the maximum bounce target with those arrows. So we hit that yesterday. We had our everything I love to see. Counter trend rally, 38.2% Fibonacci retracement, as I told you, into resistance below the yellow level. I didn't think we'd get back to the key 1800 level on that was the bottom of the support range here, and so far so good. We'll take it one day at a time, and I'll continue to watch the charts diligently for any changes. Now, look, today will be a lot of noise. I'm going to tell you that right now. So, active trade, I get posts out to you. You decide what to do with this. We're down, nice move down, and we even got. That's where I had the first arrow break yesterday. I had us going here, arrow breaking there. Arrow breaks were denote where a reaction's likely, and that was the first reaction, tradable if you wanted to. The next leg down, and then that's the one I got out to you today. So far, certainly a reaction. A reaction I define as one of two things, and I made that clear in the video. I don't think it's going to be a very big one here. I use the, if you're standing on tile floor or concrete, deck, you drop a tennis ball or a golf ball, that's going to bounce. That's a tradable bounce. Or you drop a hacky sack, it's just going to hit the ground and go thud and not go anywhere. So a reaction is when you're falling, as you were again on that 15-minute chart, and you hit a level. And so that's certainly the reaction so far. So now I drew some arrows, and there's the low. I'll show you. It was also support on the 5-minute chart of QQQ. Guys, I know a lot of traders trade the Qs. If I sit there and mark up every chart of every ETF and the futures and use the different time frames that I'm looking at, I'll never get things out to you. So I try to get things out timely. And but that's it. Remember, we had one reason for going long. I point out this nice little W bottom inverse head and shoulders pattern. That was the technical catalyst, the divergence for the bounce that we got. And it was also off the T2 on the daily chart, which isn't shown here. And so that's it. And so we're heading down there. There's your reaction so far, certainly a bounce. And then I gave you kind of a rough bounce range if you care to game it. Probably come up around right here. It's where I had it drawn. What I was doing is looking at this reaction high, and there's quite a few. We consolidated in there. I think max bounce target today, max is going to be up here. That's if we get that far. I'm going to put a downtrend line right now too. And if they pop anything to the upside and happen to rally this market higher than that today, I would put good odds on a dump into the close. If this market looks to be, closing, looks like it's going to close green today. Of course, we're solidly red right now. I think we'll see just a lot of nervous profit taking in this market. As I said, it's been not hard to read. Bullishness at extremes. This has a lot of 1999-esque about it in the market with AI hype and just general bullishness again from, and I have to use this because it goes into my mindset that, some of the, almost aggressive, outright, angry, trollish type comments about, you're crazy, this market's going up, up, up. And that kind of stuff, it speaks to, I know it's a small data set, In statistics, you want to use a bigger sampling pool. But I also go online and, and I read comment sections under, the Journal Barons and other things. I turn on CNBC and I see where I was at. So anyway, we've got that, and so here's the thing, guys. Technicals are first and foremost. So there's a little bounce to be made, and I gave you kind of a range how high. If you are gaming it as an active trader. Somewhere in the middle here would be at minimum. That's why I drew that arrow. And I could easily see something up here back to this. Remember, these were support levels I had before, and support once broken becomes resistance. So we're not talking much. And again, I think we'll see a lot of nervous profit taking on Microsoft and Amazon, and maybe Intel. I'll have to look at the charts. Okay, so that's that. Showed you on 5 minutes support as well. Got you out the ZB trade idea I've been talking about for a while. I just took, I like it. I took a bunch of ZBs today. ZBs are your 30-year Treasury bond. And this is the chart I got out to was has 120-minute candles. So each candle is 2 hours. There's some support coming up there. It's nothing super solid, but you've had these pretty big divergences. Bonds shot down today on what happened is CPI. Remember I told you, it's not just about earnings. We had a heavy economic calendar pretty thick this week. CPI came in much below expectations, and it's leading. It's another check mark for, I use fundamental analysis very much so, as I've told you. I look at a lot of economic indicators, ones that I believe to be more reliable, and kind of dismiss the ones that I think are subject to either just poor, calculations, the way they use with the birth-death model on employment numbers and all that, unemployment situation, and also things that are lagging. And GDP is one of those. It's almost always revised. Recessions are declared in hindsight, and then you get this revision of GDP after the fact. And so we're looking at what could be just the perfect scenario if you're a bear and you want, a nice market to short, is stagflation environment where you have stagnant growth and inflation. So far, we know inflation's been sticky. It was prediction made, and that's come true. That's kind of the markets, of course, taken note, and so either way. But today, where I'm going with the weaker GDP print should be indicative of yields actually falling and bonds going up, and it went the other way. So I took advantage of this drop down today. TLT folks. Again, it's not super solid support on TLT, but we do have, here's my 60-minute chart. Remember, we've been trading this, and now this is, I made it, official, kind of threw it out there today. I've been talking about it as a hedge, but now we've been going nowhere the last few days, but it's now, we'll call it an official trade. And I'll get some targets out too, but we were long here right off the lows, milked the bulk of that run, turned around, gave you 1, 2, 3 official target zones, and then a potential third. Potential means, it's not current. If I remove the word potential, then it's a target zone. So we hit T2. We're a little below it now. We're, again, on TLT, but I just showed you what ZB looks like. I tend to put a higher weighting on the futures charts than I do ETFs that are tracking futures or whatever instruments they're using. So I imagine that's what this is. And what you can see, and I'm drawing it here, is pretty big divergence that have been building. And just like on ZB, I think I showed you, here's a downtrend line in which to target. So that would be a nice trade up, nothing big, but remember, I always say this, Treasury bonds are inherently much less volatile than the stock market. I typically use a 2-time beta adjustment, meaning I will put in twice what I would put in SPY or the S&P 500 or regular index, maybe in the Nasdaq, and because the daily, the percentage gains and losses are about half, give or take. And there's an example. We're down 1% right now on TLT, 0.95 as I speak, and the Nasdaq it's turned a little bit now, but it's still down about 1.5%. It's come a little off the bottom. Okay, so that's it. And so, and I also have it back testing this trend line. Let me see if I can, there it is. There's a downtrend line that comes all the way back here, and that was in April of last year, and we broke above it, and we're back testing that. So there it is, guys. Like anything, take it or leave it. I'm just sharing with you what I'm doing and what I like. What else do I have for you? Let's talk earnings. Let's talk the market. Like I said, big earnings. There's a couple reasons I got that post out to you and expected and positioned for a bounce myself today. It was, of course, it was anticipated before we got there with that NQ 15-minute chart hitting that level and giving you a narrow break yesterday. But when you look at the market-leading stocks, you have Microsoft just broke down today, and that's good. Pre-earnings jitter, see, and it's also, remember, this can be a pre-earnings whipsaw. NVDA did it, remember, broke down right before earnings. Some stocks will do that, and you take it with a grain of salt, but I've been very clear, unwaveringly on my predictions. And so I made 2 predictions yesterday because we had 2 earnings out yesterday and this morning. Meta, certainly correct on that. It'd have to be a hell of a rally for this to be the post-FOMC noise. That's a clear breakdown. And in one fell swoop, it took out my yellow uptrend line. And this is what happens in technicals. And this is why I like to this is why I've been short, pretty heavy short the Nasdaq before I've got breakdowns on all of these. Because it's going to happen this way quite often when you've got just a beautiful setup. They don't make it easy. They don't let the bears in. They don't let the longs out. Because longs, okay, I see the trend line. Randy's right. It's a great trend line, but it's in a bull market. In a bull trend, you're supposed to, you buy support until the trends change. Well, I position at turns. I'm not a trend chaser. Trend chasers will keep buying the pullbacks, and then what happens like this, they get punished today. They gapped down, and we're only down now 11.3, but we were down, I think, gap down like 15% or something down here. And so that just blew past any reasonable stop set below the trend line, and it also denied a short seller an objective entry. Now, it was earnings, and so, it would have been a gamble to take it. But again, the prediction was based on the chart it would go down. That's a clear breakdown. Now, everything in reverse. The levels that were support, 440, 450, 440-ish, and then the uptrend line, those then become resistance. So if Apple or Amazon and Microsoft blow the cover off the ball or rally hard after earnings, and now you can see objective levels that you can short Meta on should it pull back there. Otherwise, I still maintain my downside targets. And might have to pause this video to close my NQ longs. Hold on one second. Okay, done. Anyway, so reversed it there. Like I said, just odds for a bounce, which I was about to get to. Also, there's more than just this hitting NQ and QQQ hitting support like I showed you. But there's that downtrend line I added. It might go a little higher. And so whatever I put back, a decent but room to add short position. I'll continue if we can go up a little higher today. And then it's also, again, 2 huge companies, with Amazon and Microsoft, and then Intel, of course, being a semi, and the semis being very important. So probably not a night you want to go super heavy, aggressive long if you're bullish, or too aggressively short, bearish. So I've added back. I'll tell you what, with the volatility today, I may be in and out, long and short again, but either way, I'm back to short right now. NQs in the active trading account and a couple others that I did that in. And I'm going to get back to the big guys. All right. So we were on Microsoft. Microsoft broke down, check mark taken with a grain of salt, pre-earnings. But as with Meta and the other one I predicted last night for you, they reported today, big industrials, CAT. And so, look at a chart. And to me, CAT said, clearly down. Hit my target right there. I'll give you a target of 333.42. And this one also, in the fashion we're seeing lately, they're getting taken out to the shed. Expectations are just so high. Bullish spirits, animal spirits just got out of whack recently. And, based on, completely dismissive of the lag effect and rates and everything. I can go over and over and over again, all the fundamental stuff. And it's just, so, again, I'm seeing just a huge opportunity this year and a lot more downside. And then if things go the way I think they're going to go, Amazon, Microsoft, and next week Apple will probably be the catalyst to just kind of seal the deal. But like I said, there's been times where we're sitting right on the edge of the cliff looking over at, key support. Last year's a great example in the fall, and it didn't happen. Support held. Like I said, we've had much, much more check marks, many more support levels, sectors breaking down, indexes breaking down. So I feel a lot more confident In fact, back then we didn't short. We held off last fall because we tested we had shorts going down to that drop in the fall. I'm talking back here. And then that was it last fall. And I had purple lines on all the other key, the major stocks, but we were at the 200-day moving averages. And see, we swung it down, T1, T2, and then we reversed. But this time around, like I said, I think those levels will give way instead of hold as they did back last fall. So let me go over the rest of them. Microsoft, back to that, below the level, but again, pre-earnings. So we'll call it a check mark, but with a grain of salt because they have to report. We'll know tomorrow. Let's see how this one follows through. You know where my targets are. You know which way I think it's going to go. Apple, still the best looking chart of all of the FK Mag 7s right now, with that big divergent low recently. But, it's not doing much today. Again, I don't have much of an opinion. Longer term, I have an opinion. Near term, it's going to depend on what happens to the stocks that report this week. And, of course, Apple next week. It may hold up somewhat. But I think if they take Amazon and or Microsoft out to the woodshed after they report, then I think you'll see just a lot of nervous longs jumping ship on Apple too. NVDA, not much more to add. We perfect back test of the 840 level yesterday. We're still below it for now. Intel, again, NVIDIA ate Intel's lunch in the last couple of years. But Intel's a semi. Maybe they give some color on visibility for the sector, and that may affect NVIDIA. I don't know. But NVIDIA doesn't report for a while. Alphabet, 149.46, still comfortably above, but they're starting to get scared. Meta, it's just an incremental thing, guys. We've been getting check mark after check mark for the last few weeks, and this is what's expected. The last of the holdouts are finally going to buckle, and when they do, then it's like that all in, kind of tuck it away, wait till we get down to those longer term swing targets. If you're just a typical swing trader, and then cover. Again, if you're an active trader, these are the things I looked at this morning. Amazon was at support as well with QQQ at that yellow support level right there, the key level. That's the top. There's a big gap right here. You can see on this chart. Let me circle that, and then that's been the support level. So that's a level that needs to go. It's a level I think will go. Even looks a little flaggish, like you had a move down, a little bear flag, which we gapped down. So. And then Meta, I think we already covered close, but not all the way there. So that's it. I don't want to expand too much more, but what I did want to do is reiterate that, the ones that are coming up to report, Microsoft. I'm sorry, guys. I know I was saying Amazon earlier. I was off here. It's Microsoft and Alphabet. That's why you're seeing the drop in Alphabet, the nervousness from what happened to Meta. Remember, these guys are locked at the hip, these former, Mag 7 stocks, whatever you want to call them. So that's what you're seeing today, selling from these two, even right before they reported, based on a company that, there's obviously some relationship there. They ad clicks and all that other stuff, that they have some overlapping interests. But all right, let's see what happens. You guys have the levels to watch. I just did updates late yesterday on natural gas, crude oil, the VIX. I covered the other day, pulled back there, that 1573 support. That was this, I had pointed out well in advance. We had this ascending triangle pattern here with price resistance there. And then the uptrend line with that post FOMC whipsaw. And, the VIX is a volatile little sucker. It's going to slice through, above and through. But so far, that's a pullback. And that's what happened when the VIX usually does take off. There's usually a check early on. It starts to go, has a big pullback. It's just very volatile. If you trade it, you know that. And if you don't know that, then don't trade it. Be very careful, especially those leveraged ETNs, because the VIX is inherently volatile. It goes up and down 20+% in a good day. So you really, you need to leverage it up 2-3 times with those things. You can do it. Just know that if you're in these grinds, that's where the leverage works against you. I have a whole section I wrote up on the FAQ page on the site. If you go to resources on the top menu, FAQ, or Yeah, FAQ, frequently asked questions, and then ETF related questions. I talk about the decay. And so that's where, these give backs, having, leverage ETFs work great in a unidirectional trend. If it's a bullish 2 or 3 time long and you have almost all green sticks, you're going to actually do better than 2 or 3 times the underlying index. Likewise for the bearish ones, and a very straight, roughly, unidirectional drop with hardly any green days in there. It's these back and forths that really decay. So just keep that in mind, and therefore you might not want to use a leverage one in the VIX, or like me, I use the futures. You can trade the futures if you want. I can get some options traders on the site, and you can trade the options on the VIX. All right, just wanted to mention that's still holding support. And, if there's a pop after, these guys, Alphabet or Microsoft, rally the market tonight, and there's a little more upside. Remember, we hit, there's still, some resistance levels overhead. We stopped at the one I think would cap the rally, but we could come all the way back in for maybe a full back test of 433 on QQQ. Who knows? All I can tell you is this is still a valid trend line. So if they do this, then that would be an objective entry. But only if you can make a case to objectively add to a short. Remember my trading plan, nothing above 433 on QQQ and the 1800-ish level on NQ. If that happens, I'll sit for a little bit there to see if it, try to gauge it, if it's going to be a whipsaw back through there. At this point, hopefully we don't see it. But I don't think we will. I'm just trying to tell you that's kind of my plan. So where I'm going with the VIX is you don't want to buy the VIX unless you have a pretty good degree of confidence of going short the market. And the VIX is based on the S&P 500, but the Nasdaq 100 is going to move along with it. They go up and down together. Okay, guys, I'm going to wrap it up here, and I think I'm going to layer into one more lot of NQ shorts. I think this bounce has run its course here. Let's see. Just try to talk to you in real time here. Yeah, look at that. Had a little minor resistance level there. Okay, just grab me some more NQs. But almost the same place I was at before. It might be a hair higher. But we're just right at that downtrend line. And like I showed you, a little resistance there. And all right, that's it. So, that's where I think probably max bounce target today. But one thing I could see before even we close, even if we get another bounce up today, I'm still talking here, but this is something that I noted when I go back to the market leaders. Microsoft, of course, already broke down. It's going to rally and try to backtest the level, and again, earnings are coming up. Apple popped into resistance here on this daily 60-minute chart, also into resistance there. But there was one of them. Which one was it? No, NVIDIA is kind of in no man's land. Alphabet. So Alphabet, who's, there's that nervous selling before earnings, has the 149.46, my key yellow level, which is decent support. Not super great, but decent. Reaction high there, reaction low there. The 50-day moving average. And so it's just a hair above it. And Amazon came in and reversed just a hair above my level there. So I could see one more thrust down today, maybe another bounce. But again, this is all active trading stuff. Minute by minute, second by second, I'll reassess. And then, if I have a bad hand, it's like poker. You get a bad hand. If you're playing no hold'em, throw it away. Don't. That's what the pros will do. Don't try to see the river cards and keep betting. It gets sucked in more. It's typically the inexperienced players that'll keep calling, even if they don't have a great hand. And then something comes up, around the turn or the river. They have a marginal hand, a pair or something, and 2 pairs, but they don't see the flush on the board, and they get wiped out. So that's how trading is. If you got a bad hand, muck it. Throw it away, reset. You can always get back in. All right, guys, I'm going to wrap it up here. This has been Randy Finney with Right Side of the Chart. Have a great day.